Boom, we're live. It's Teal and the Arcane Bear. We have another wonderful guest for you today. This is Simon Dixon, one of the leaders and founders of Bkntothefuture. They were able to garner a lot of attention from such notable names like I almost forgot Richard Branson's name there for a second. They've moved almost around $325 million through the information that you guys provide into different investments. So very excited to chat with you today, Simon. How are you doing?
Hey, very good. Thanks for having me.
No, it's our pleasure. We like to bring as many guests on as possible. You know, I like to learn as much as possible, and the best way to do that is to ask people questions. So with you today, what I would like is just kind of give us a background, introduce yourself to everyone. For those of the Bear family that don't know who Simon Dixon is, it would kind of be a nice lead-in intro.
Sure. Yeah. Okay. Well, I guess my started. I was originally trained in economics and disagreed with everything that I learned in economics. So that really started off my career in the future invention of Bitcoin. It wasn't around at the time. I did 3 years working in investment banking and worked as a trader, as a market maker, and then worked on IPOs, floating companies on the London Stock Exchange. In 2006, I left and really dedicating myself to talking about the history of money and some of the problems with money and how there was systemic risk in the banking system. But the problem was nobody gave a damn in 2006 and everyone gave a damn in 2007. So we had this little financial crisis and suddenly people were really interested in the message. And so there was a talk that I gave, I think it was Occupy London, where somebody told me about Bitcoin, and they told me that they had sold all of their house and gone homeless and moved into a squat in London with some of the early Bitcoin developers. I was writing my book, Bank to the Future, at the time, which was about the problems that are going to need to be fixed in banking. Through these chance meetings, I was invited to speak at the very first Bitcoin conference in the world.
Nice.
And so the first Bitcoin conference was in Prague. The event was like a secret hackathon location afterwards. It could only be described as a crack den, the location. There was about 20 people in the room. Half of them were computer science geeks and the other half were people that wanted to really take down the banking system and governments around the world using Bitcoin. And so really that was my first intro. I started investing in the industry, founded a company called Bkntothefuture.com, which I co-founded. And that was designed around investing in a lot of the disruptive financial technology companies and allowing people to co-invest in the same things that we were investing in. Because our crypto investments did so well as a company, we didn't really need any VC funding or anything. So we dedicated the platform to supporting this tiny little industry called the Bitcoin industry. There was no blockchain industry at the time. There was nothing else going on. And there was very few companies. And some of the companies that we invested in and listed funding rounds in the platform were companies that were very hard to fund at the time. No one was interested. Companies like BitPay was one of the companies we invested into. And then you got companies like Kraken and Bitstamp and Bitfinex and many others. We hosted a lot of the funding rounds, and many of the early investors through our platform have got equity in some of the most valuable companies in the industry today because they were investing through Bkntothefuture.com. And the book that I wrote was actually the first published book to include Bitcoin. And then we were watching the industry grow really through token sales, through altcoins, through ICOs and hard forks and everything that's happened since.
Yeah, it's been a wild ride into that initial entry point for you two was great. I think a lot of the reason why user adoption doesn't come so quickly in I guess what I'll call first world countries for now is the monetary system looks like it works. So you have this kind of uncanny feeling that, your regular MasterCard, there's nothing wrong with it. So a lot of people are unlikely to switch because they don't necessarily understand the fundamental flaws with the banking system and the way money works today. And I think that entry is extremely important, and it obviously sent you down the right path. So you guys were able to make a lot of ground in the space that you said, being able to enter into equity positions in some of the initial movers is a huge advantage. What are you guys working on now? And do the equity tokens, or does equity look like it's going to become tokenized in countries like London or Hong Kong, etc.?
Sure. So the journey that we went through is, I mean, originally we were always doing things in, aiming to do things in compliance with securities laws, and so the first 4 years it took us to get all the registrations that we needed in order to launch a company. The problem was at the time was that we were based in the UK at the time, and our registration with the regulator there meant that we could only raise funding for UK companies with UK investors. Now, if you can imagine, the Bitcoin industry, which was very global, had probably no UK companies. And if you wanted to raise finance for a company as niche and crazy as a Bitcoin company, you needed the whole world because there just wasn't that many investors. So we had to relocate. We registered with a more globally minded regulator. We relocated to Asia. So I moved to Hong Kong personally. And that kind of led to the global structure where we started integrating with international securities laws, allowing people to invest all around the world. Now, that's when we really allowed a lot of our investors to invest in the equity. But in the meantime, tokens and ICOs were starting to grow. So the first one we knew of was Mastercoin, where essentially it was what Ethereum later became, but it was all done on the Bitcoin blockchain. There was no Ethereum at the time, and Vitalik was working on that one. So, and then we invested in many of the token sales that came from that, like MadeSafe was one of them, and Factum was one of them. Storage was another one. These are some of the really early ones. And then obviously Ethereum came along. So we also, a lot of our investors invested into the original Ethereum ICO, and we did some of the early mining, and we had a mining product that we launched through that. And then the token sale boom came along, and all of a sudden, no company in our industry was willing to sell equity because they could do a token sale, and no one was willing to invest in equity because they could get instant liquidity and everything that came in as the token market evolved. And so those twin forces really meant that our business model really got disrupted in that moment. So we had to switch. And what we did is we always believed that when a private company issues a token, it was always going to be a security. But the regulators were not really enforcing that. So what we did is we were allowing people to co-syndicate into these token deals, but we were doing it in compliance with securities laws. At the time, I mean, people were, it seemed like a bit of a crazy thing to do, but we thought this was going to come around. And then eventually, we were investing in the disruption just in case. So we were going to be okay no matter what happened. But we always knew that at some point, we'd been working so many years on complying with global securities laws at Bkntothefuture that the industry was going to need that as the industry grows and grows and grows. As we know, in 2017, it grew so big that it started, becoming bigger than the amount invested in the venture capital industry. And IPOs and public companies all around the world were starting to look at launching their own tokens in order to pump their stock prices. So regulators had to jump in at this point because the entire financial market was about to be disrupted by tokens. And so really that is where we are right now. We did our own token sale in compliance with securities laws, the BF token. And we think the next wave, so this year in 2018, we're going to be launching our secondary market, which means that much of their equity that we invested in the beginning, investors will be able to sell that and it can be traded back and forth through the market. And then in 2019, we're looking to disrupt ourselves. So we're thinking about, well, imagine if we were building Bkntothefuture from scratch with what we know today. And so we're launching a securities token exchange based upon, many of the decades of experience and licenses and everything that we do, all the different registrations that we've acquired. and applying that to what we know about the technology and the market today.
Yeah, the space grew so quickly, it's definitely smart to have taken everything as a security, because the Howey test is such a vague question, and I know the SEC from the United States is kind of the leader in those security rulings, and because of the vague kind of clauses near the end of the questions of what a security might be, it's best to have all your bases covered, because at some point they could even say something as simple as a laundromat token was a security. But what I've really liked about this, and you touched on it too, is that the blockchain sector was bigger than the VC space this year. I think the crowd-funded models do a lot better. A company like GoFundMe or the crowd-funded sources, I think people getting involved and having more of an interest of what they're investing in is almost implicit. And we start to see these really cool projects drive forward because of it. What do you think the regulatory bodies have aside from, I guess, the general support of the governments? Like a lot of these, the tokenization of certain things, especially of protocols like Ethereum, we've kind of broken boundaries like borders. You could walk across borders with millions of dollars with nothing but a private key in your brain. So we've transcended a lot of the governments and the banks' original laws. Do you think regulation will continue to stay paramount, or do you think these protocols will shed the older styles of governance that we have, and are we likely to move into tokenized governance as well?
So there's really a lot to that question. The first thing, I think a couple of distinctions that are worth making that will help us unpack that. The first is understanding what these blockchains actually disrupt. So when I'm thinking about the disruption of central banking, the ability to own your own money, the ability to spend your own money without censorship, and the ability to reward savers that hold and save in the long term, then you're talking about Bitcoin. There's only one game in town, and that's Bitcoin. Bitcoin is the only decentralized blockchain that allows you to own your own money, spend your own money, and has a monetary policy that rewards the saver rather than the debtor, as opposed to traditional money. When you deposit your money at a bank, the money is not yours. They decide if you can spend it or not. The sensible strategy with fiat money is, because its value goes down, is to take on debt and not to save.
Yeah, and or to spend it. No, I think that's a great
Bitcoin
point.
And then you've got Ethereum. Now, Ethereum is an inflationary currency. If you're comparing it with currency, it's less decentralized. It's been proven that the chain can roll back. However, it was optimized in order to allow for this thing called smart contracts. And it turns out that the only smart contract that people are interested in, at least today, is a financial product. And that's when tokens and ICOs and disruption into the public markets came along, because it was so much more accessible by so many more people. And therefore, Ethereum is not really disruption in terms of central banking, currency, any of those things. It's more around technology that allows you to disrupt the need for a broker, a stock exchange, and everything in between. But having said that, it started decentralized. And because Ethereum is not as decentralized or censorship resistant as Bitcoin, and because everyone that's building on top of it is actually people that identify themselves, you can't have the same level of disruption that Bitcoin has. The only reason that Bitcoin exists today is because no government and no authority and no regulator can shut it down. If they could, they would, but they just can't. So their only choice is to embrace it. Now, with these ICOs, regulators can shut them down because it's not created by an anonymous person. It's not really decentralized. And therefore, you have to, if you're selling an investment, you have to comply with securities laws. That doesn't mean that we can't get a hybrid benefit. So I think that in the future, you will have three different markets. You'll have the fully decentralized market, which would be an anonymous ICO, where the founders aren't known and is funding something that the government doesn't want them to fund. An example of that is when the exchange BTCE was shut down. The FBI seized it and they launched a token in order to bring the exchange back up and repay some of the money that had been confiscated. That's an example of the ICO that will happen in a decentralized way. In the medium, then you have ICOs that are sold as securities, but actually the utility of the token means that it can trade on a crypto exchange, and kind of like Ethereum itself. Originally, it was definitely a security. You sell an investment contract to invest in something that hasn't been built yet. And then the token, once it's functioning, it has utility, and therefore it can trade on a crypto exchange. And then the final one is fully regulated securities, where the actual product is a security, it's sold as a security, it trades as a security, and it will need to launch on a hybrid kind of crypto stroke securities exchange. And those three markets, all of them will boom, is my forecast.
Nice. That was a great explanation. And you're right. I think that the first little bit about Bitcoin there was absolutely correct. And I guess I didn't mean to use Ethereum as the use case there. Normally I would go to the Bitcoin format, but you're right. I think the heading of like a pseudo anonymous person, it really helped drive the disruption further, because there is no particular person attached to these particular companies, and that's valuable in a world of decentralization, because you want it to be kind of everyone's. It's like the everyman's Bitcoin. Whereas, so I think that was a great point. Now the markets are really in a tailspin today, and we're hitting some, I think, 2017's highs. So we're in a kind of precarious place. What do you see for potential? What's the potential downside risk right now? I mean, we never really tested areas for, Ethereum, for instance, around $30 to $40. Do you think we have a significant amount of downside that we could potentially be at risk to seeing, or is there enough momentum to continually drive us forward, at least from a price point?
Yeah, so this all depends on your time frame. So having been an investor in crypto since 2011, every single year, with the exception of two, and maybe this year would be the second one, it has rewarded the person that saved and normally almost punished the trader. So firstly, the trader, 90% of traders lose money, only 10% make money. And in crypto, they're mainly insiders. It's the same as every industry. 10% of institutional insiders make money, 90% of retail traders lose money. However, there is another game, and that's investing. If people just simply buy and hold, they tend to outperform traders, with the exception of the insiders and the 10% that make money. So my experience of being involved in this industry is the really wealthy people don't try and call the tops and bottoms. They may get it wrong, but they just simply invest into a thesis, diversify, and hold. And so what I've seen personally is I've seen my $30 Bitcoin become worth $3 in a day. I've seen my $1,200 Bitcoin become worth $250 in a period of a month. I've seen my $20,000 Bitcoin become worth $5,000 Bitcoin in a couple of months earlier this year. But what is important to understand is you're either a trader or you're an investor. If you're a trader, you better be an insider, because 10% make money out of the 90%. If you then want to decide that you want to be an investor, then you've got to pick your economic theses that you're going to invest into. The reality is Bitcoin is the easiest economic theses to understand. There's only ever going to be 21 million of them. They get more and more useful every year. The technology improves every single year as it scales. And as long as that utility increases each and every year, and the only thing it needs to do in order for the utility to increase is the financial system needs to screw up even more, which it is doing a really good job of, because traditional money is a Ponzi scheme, and an economy that rewards the person that takes on debt versus the crypto economy is one that rewards the saver in terms of Bitcoin. And so really that is the investment thesis. And so where could it go right now? Well, I would not be surprised if I see 5,000, 4,000 or beyond here. But what I'm certain of is if I'm taking a 2-3 year time frame, I'm almost certain, and I've seen it time and time again, that we're going to hit new highs. I remember very, very well everyone telling me that when Bitcoin hit $3, they thought it was too late, they missed the boat. What's the next thing they can do? When it hit $10, they were like, it was too late, it's missed the boat, what's the next thing I can do? When it hit $100, it's too late, I've missed the boat, what's the next thing I can do? $1,000, $10,000, and the same will happen at $100,000 and beyond. Because the cold hard reality is that Bitcoin is either worth zero or it's sound money. And if it's sound money, it's worth a hell of a lot more than it is today.
Yeah, I think that's a really important philosophical point too, that the failing economic system that we have is it actually forces people to spend or to take on or incur more debt. And I've always thought this was fascinating is that Bitcoin is focused on more of the saver and the production model, which is where we originally had a lot of sound economic ideas come from, was that we would save to produce more. That was the point of money and work in the first place, that we could economically save something or share it with other people. It came probably from old days with having too much mammoth meat or something like this. We knew that it's valuable to be able to share things with people and to store that value. So I think that's a really important key part. And I rode that too, from $90 to $1,300 back down to $200. And consistently, the investor has played out better because they're able to not, I guess, go in without any risk, which is to pretty much ignore your investment to 3 to 5 years at a time and come back and see if your thesis of investment style is correct. And you're right, most traders do lose out, but we did see a spectacular year, things from ant shares from I think $1 to $150 at its high. There are all these, so there's a lot of value that was left on the table if you weren't trying to play around in the trading game too. So as often I got burned, I do like to play around with what I'm obviously really
diversify. Yeah, absolutely. Diversify with 10% of your Bitcoin. Diversify with 20% if you're higher risk. Diversify with 30 to 50%. If you want, but understand the difference between your investment money and your speculative money. Those that were speculating in 2017, no matter who you are, you did incredibly well. Those that are speculating in 2018, you probably lost your shirt.
Yeah, absolutely. I think it's important to make the distinction between those two types of in strategies, essentially. The S&P 500, again, I'm not using this as a positive example, but people were always looking for the 7-year return of a few percent per year. So I think that long-term outlook is extremely important, and it's a great thing, I think, for tomorrow when everyone hears that, or I guess which will appear as today, that to stay calm, continue to build your regular businesses and enjoy the life that you have, because 3 to 5 years is a long time, and a lot can happen in that time frame. What do you personally see happening in the growth of the space for a lot of the tokens that were launched? I think we're going to see a lot of dead in the water ducks. Do you have any outliers that that your company has been taking a look at that you think have a great shot and have a great thesis behind them?
Yeah, I mean, we continue to invest in the types of things that are attracting great investors and great teams. We've always had a similar philosophy at Bank to the Future that no matter how interesting your idea is, a group of inexperienced or not very good people with not very good investors that tend to not be able to take a great idea and turn it into reality. But what we've often seen is people with what might not be a good idea, if they can get a really great team around them, they can get community and they can get great investors, then collectively those people can all turn a really rubbish idea into a great idea and find the market match. So at Bank to the Future, we're always, our philosophy of the types of things that we list and we invest in is we're just looking for great people in terms of dedicated to a mission. The problem with ICOs is it produced a lot of people that wanted to get rich very quickly. And then the second, kind of the Ethereum culture came where, you started developing and then it became much more profitable to do a token sale. And then they jumped from project to project to project. We're looking for people that are committed to something. At Bank to the Future, we had a really clear mission. We believe that the future of finance looks very different from the past. We wanted to allow people to diversify into it. And so far, we've been at it for, coming up to 8 years now. And that's what we need in these people. We need people that are going to stick with it through thick and thin. If the original theses of what the market wanted isn't correct, they're going to adjust. And they've got a great team of investors around them that are going to help them. And that's kind of what we've always invested into. So the kind of philosophy that we've always been by is if you can get people that have a high reputation to lose, that have a mission that they want to stick to, then you can put good money to it and they can go for it. But no one's going to know whether the technology is actually going to work or not, because very few people are actually qualified to actually know whether EOS is going to work versus Cardano or versus. And when Ethereum came along, we had no idea whether Ethereum was going to work or ever get launched. It was funded by Bitcoiners that thought this technology was interesting. You have no real idea to know how to do that. So all you can do is diversify and make sure you're picking the teams that are committed and that they've got good investors behind them that are going to push them in the right direction when shit hits the fan and things get hard. And the bear markets are really where great innovation happens. The people that are trying to do it during the bull markets and then run away during the bear markets, those are the ones to avoid. The ones that are building in the bear markets and getting ready for the bull markets and stick on track is the type of teams we're looking to fund and invest into.
So I think it's really important when you're investing in people instead of necessarily like a hardline business model. The company Super Nintendo originally started off as a board game, and you want to find individuals that are talented enough to take what they know it will work and then also smart enough to be able to pivot when the markets change, because we're in such the dynamic range of movement in the informational and tech space right now. For any of us that like Greg Kurzweil, we know that we're growing at an exponential rate here, and we're starting to get into some really unique other areas of technology that I think will join along the releasing of friction in the banking sector. So I'm really grateful to hear that you guys have made such great headwind in helping educate as well as helping others invest, because it's one of the hardest things to do. Like when I first bought Bitcoin, it was an estranged thing to go to try to buy as a Canadian, to buy it through an exchange. It was very, very abstract. It's gotten a lot easier. And just like we started this conversation, I think more so than the tech, it's really about the understanding of why people need to switch. And sadly, it took a financial collapse in 2008 to really wake people up. And it's looking, again, like we might be headed down that same path, that for people to realize why something like Bitcoin is such a valuable means of saving and storage as a sound money is because what we currently are running on is heading us straight towards the edge of a cliff.
Absolutely.
So I think, Simon, what I'd like to do is we'll keep it short today, and then anytime you want to come back and have a chat, let's line it up and do it again, because there's a bunch more questions I know we could go off onto, but even still, I think the shorter the content, people are busy throughout their days. So I'm really grateful for you joining us today. I do hope that you come back in the future, and if not, if we can sit down together in person. So I will be headed to the World Blockchain Forum in September. If you happen to be there, hopefully we can have a sit down as well.
All right. Well, thanks for having me.
I look forward to the next conversation. The best of luck with everything. We will have all the links for Simon Dixon and the Bank to the Future company in the description below. Remember, if you enjoy this content, give us those thumbs up. It helps other people later on down the YouTube algorithm find this valuable information. If you're new to the Bear family, subscribe, do all those fun things, and make sure to check out Simon Dixon and Bank to the Future. They've done a lot of great work, and really grateful to have you on as a guest today. Thank you.
Thank you.